of Ghana's medium-term target range for their inflation is 6% to 10%. Being a Nigerian, knowing that we're even battling double digits inflation far above the 10% is just striking to me. I think that was one of the reasons I chose to open with this story.
I feel like by mopping up these trillions of naira, the CBN has just reduced the speculative pressure on the naira currency.
Absolutely.
Right. It has also supports the exchange rate stability. It helps in stabilizing the exchange rate in the country. Yeah. It helps to strengthen the confidence of the FX, that's the forex in market, right? And everything that has to do with the Nigerian exchange rate and all.
From the last episodes, we spoke about how, the NGX, the All Share Index, and the Nigerian Stock Exchange is performing at a very phenomenal rate. It has been since maybe the past 3 years in this administration, or 4 years thereabouts, you want to call it. Popping out over 3 trillion naira from the economy is definitely going to cause some shakes, So we're definitely going to be looking out for what the rates are going to be, the lending rates, the open buyback rates.
Also for ourselves and for our, neighboring country, the Ghanaian city volatility is another thing to look out for. Yeah, so let's keep our eyes on the city's reaction to the slight uptick in, food inflation. Yeah, and so if imported food costs rise further, it could stress the local currency's recovery path. Welcome back to Across Markets by Business 360. I remain your host, Vera Ifechuku. Joining me here is...
I'm Joy Abia, and I am your co-host on this space. So we're starting with Ghana's headline inflation, okay? So they moved from 3.4% in April to 3.7% now in the past month, which is in May. And so the major cause of that has been the food inflation. Now, the reason I'm starting with this is because it was quite interesting to see that Ghana is even the Bank of Ghana, their targets, midterm target range of inflation is from about 6% to 10%. And being a Nigerian, knowing that we're even battling double digits inflation far above the 10% is just striking to me. I think that was one of the reasons I chose to open with this story. And of course, what's the major cause of this inflation? It's because it's majorly the food inflation. So their food inflation year on year moved from 2.2% to 3.3%, and that's a 1.1% increase. So this just tells us one thing: there's just food prices are hiking, maybe some imports and some import issues that they're having. But more importantly, even their non-food inflation still fell, from I think 4.2% to 4.1%. That's the still year on year. So, however, like I said again, the Bank of Ghana's medium-term target range for their inflation is 6% to 10%. And so this is actually no cause for alarm, but it's according to the statistic or the news, it's this 3.7% is sort of their highest since the beginning of the year, that they've seen so far. And, as a Nigerian, I'm just looking at my our sisters wow, well done. You're enjoying quite a good regime because what are the things that we should possibly first of all, according to the Bank of Ghana, they are not exactly fazed by this story. They're not exactly fazed by this increase because they know, again, that targets within their range. It's not even close to their range just yet. And, they are still looking forward to implementing a lot of monetary policy actions. Some of they're still putting that in place to make sure that they are still within their range and they're not going far above all of the the things that they have set in place for the year. So anyway, what does this, do you have any questions for me?
Not really questions. I just want to feed in a few things here. The numbers are quite a lot, but inflation story in Ghana is not broad. it's not a broad-based something at the moment.
Okay.
Yes, because instead it's about food prices that are increasing really fast. Non-food prices are also becoming more stable, right? And also the overall inflation in Ghana remains low. I feel like it remains low and below the central bank targets range, right? So I could get from this that what this means is that policymakers will be watching. They'll definitely be watching food supply in the country, right? And also monitor the conditions closely, because food is currently the main source of inflation in the country, or source of inflation pressure in the country at the moment.
Oh, yeah, you're right. First of all, like, basically, I think one of the things that's going to reflect in Ghana, I'm not in Ghana, I'm not a citizen, but one of the things that would reflect is possibly the, like, prices, like, let's just call it, like, maybe some prices in some goods, because of the food inflation.
Yes.
Because of the food costs, I think it's going to, affect, a lot of small businesses businesses and their pricing. Yeah. So, but like, kudos to the Bank of Ghana. I think this is very impressive, especially because I'm in Nigeria and we know what our battling some numbers.
Definitely.
Anyway, okay. So another news that actually I think you were actually the one that brought this one to my attention. The CBN's, that's the Central Bank of Nigeria's open market operations. First of all, open market operations are like, it's an essential tool that the CBN uses to mop up money from the economy. Okay. So if there's a lot of money in supply or a lot of money in circulation, right, the government, the Central Bank of Nigeria puts up, like, they sell short-term bills, some market instruments anyway, money market instruments, they sell, like, they put up in the market and then to institutional, investors to, buy. Right. So basically their target for this their last OMO, it was 600 billion naira.
Wow.
And they met and surpassed their targets in those operations by getting over 3 trillion naira.
Wow.
From the economy. So basically they've sold their instruments and gotten back that amount. And so, like, that just means there's been a lot of money in circulation, and we already know that the CBN is actively on, of course they have to be active on helping the economy become better. And so far we saw, I think one of the points that we've addressed in this show is the current CBN, like, that inflation drop, like, we've seen that inflation drop. So maybe this can actually reflect something good for our own inflation rate coming. Like, let's mirror our brothers and sisters in, like, Ghana and Accra. So in Ghana, sorry. So so actually, so that was like an aggressive liquidity drain. What are the things to expect? These are the most important things. If you're a business, or like an institutional investor, you handle big money, of course. One of the things that you may have to, like, put in mind now is that the guys who have money, they are going to, if you're actually going to be looking for money to do your biddings, all that you are up to, they'll possibly charge you higher than you probably have been charged before. And that's because simple law of economics, there's less money in supply. So since you need money, you're gonna have to pay a higher amount to get that money. So I think this is impressive, and I'm looking forward to what the new, let's just say, what is going to do for, like, especially the inflation rate, the numbers, since there's less money in supply, especially so for consumers as well, right? I don't know what that would actually mean for the consumer, having less money in supply, but we will for a fact know that, okay, maybe things would possibly be a little bit more expensive in this period. Yeah, do you have...
Well, I feel like by mopping up these trillions of naira, the CBN has just, reduced the speculative pressure on the naira currency.
Absolutely.
Right? It has also, like, supports the exchange rate stability. It helps in stabilizing the exchange rate in the country. Yeah. It helps to strengthen the confidence of the FX, that's the forex in market, right? And everything that has to do with the Nigerian exchange rate and all. Yeah, and also the real story is that the investors here, they are willing to commit over 3 trillion naira. That's a really huge amount, right?
Yeah.
And I mean, the CBN also choose to absorb all of that. They choose to absorb it, and that's all that liquidity into, signaling, which could actually signal a very aggressive or, stance towards the managing of supply, money, and supporting the naira and the currency as a whole. Yeah, so I just feel like that's what you can see out of this.
Yeah, amazing. Well done. You've actually said right. Everything is clear and everything does add up to the story. Okay,
so let's move into the equity market. So last week marked the massive wealth distribution circle on the Nigerian exchange, as corporates and companies have finally shared their dividends to their investors. So about 7 companies, if I'm not mistaken, about 7 companies listed on the Nigerian exchange has paid their dividends to investors and shareholders on the 5th of June. So I'll be listing out those companies and their dividend yield of which they had shared. So the first one, we have the Skyway Aviation Handling Company PLC, whose dividend yield was at 0.77%. We have the Jay's Bank PLC, whose dividend was also at 1.22%. We have the Better Glass PLC, their dividend was at 1.28%. The Industrial and Medical Gases Nigeria PLC dividend yield was 1.33%. The Julius Berger Nigerian PLC dividend yield was at 1.37%. The Chemical and Allied Products PLC dividend yield was at 2.28%. And of course, to top the list, we have the Boa Food. Those people are always like coming up at the top most of the time. Yeah, and they were at the top list, and their dividend was the highest dividend that actually yielded, of which they had the dividend of 2.98%. That is quite a huge one there. I mean, kudos to all the companies in the Nigerian exchange. They're all doing well, and I consider here for a fact that the economy is definitely going to boom soonest year, and investors are actually putting in their money in good places and getting good returns as well. So do you think you have anything to say?
You said the economy is going to boom. It's already booming. From the last episodes, we spoke about how the NGX, the All Share Index, and the Nigerian Stock Exchange is performing at a very phenomenal rate. It has been since maybe the past 3 years in this administration, or 4 years thereabouts, you want to call it. So specifically what this means, I would say that for businesses, most investors now would actually be looking at those companies that are doing well in terms of dividend, and this is also maybe in the future reduce the cost of maybe acquiring shares from these companies in case they would have to maybe issue out more shares. So I just think that this, because of their performance, they wouldn't have to. It'll just be a good stance for them within the market, and investors and the general public, everyone who wants to buy into all of these companies. So well done to all of the companies. So, and another sector signal, this is agro business. For just a little bit of backstory, the last episode we were talking about how for the energy sector, the Nigerian government rejected a loan from the World Bank over $700 million, I think, to finance and advance the energy sector. Okay, so they did that. However, they are now, according to the stories, they are pushing for a 59 million euros loan, right? Or like support from the European Union. And for what? It is to curb, all of to curb all of the illegalities, I'll just call it in terms of everything, I'll just call it illegalities and all regulated operations around the fishing area, the fishing sector, in across our border, around our border, right? And so that is the Gulf of Guinea. So the Gulf of Guinea is one of the world's most critical maritime corridors, but illegal industrial fishing vessels that is often foreign owned, cost the region billions of dollars annually in lost ecological wealth and food securities. So
Wow.
yeah, like we're trying to, the government has said that this is one of the most important things, so why not, so like for them to push for money, to ask for money in this regard, they are saying, okay. I would actually also say that maybe because this is part of our efforts in being our own suppliers, being people that feed our own nation. So over energy, putting in context, like, okay, if they are actually prioritizing money, spending money to curb all of the illegalities and every problem around this sector, the fishing area, or let's just call it in agriculture or agro business, we'll just say that, okay, let's just say that the government is actually feeding the nation first, putting our own production needs first. So if we can curb all of the illegalities, most likely our own fishing efforts would definitely increase, and would see more of, I don't know, like it just means the simple things, right? If all of these issues are solved, we would actually we'll generate more revenue within the sector. That's just it. So yeah. So yeah, like the funding is currently under formal bilateral review and negotiation. So if it's approved, procurement cycles for maritime surveillance hardware and naval capacity building will commence in late 2026. Okay, let's see how far that goes.
Yeah, that's very, very true. That's very valid and correct. Yeah, and I mean, Nigeria is seeking 59 million euro from the European Union, yes, and it's to support and strengthen the maritime surveillance and enforcement as well, and with the total of also with the aim, right, of stopping illegal fishing activities in the country that are depleting the fishing stocks and costing the country's valuable economic resources in the Gulf of Guinea. All right, so let's go into our spotlights section for today, and we're going to be spotlighting on the FCMB's Q1 2026 earnings explosion. Yeah, so our feature today is basically on the performance of the First City Monument Bank, that is the FCMB, which released its Q1 2026 financial scorecard, and the numbers are, I'll tell you, the numbers are actually dizzying. Gross earnings are surged by 26.7%, which is propelling their pre-tax profits to an astonishing 87 billion naira for just the first 3 months of this year. And we say that's really massive. So now let's unpack how these tier 2 bank managed to post tier 1 grade profitability numbers. Right, so we can see here that the profit spike is a direct byproduct of the high interest rates in the environment here, and by aggressively repricing their risk assets while leveraging cheap transactional retail deposits. So the FCMB expanded its net interest margin significantly. Also, foreign exchange revaluation has gains and continue to provide a massive tailwind, for their balance sheet. So do you think you have anything you might want to say about this?
FCMB is quite impressive. I mean, because it's not maybe because of it's not one of the banks that I would say is on my own radar, but it's definitely one of the oldest banks in Nigeria. And it's not surprising to see that they are performing well and their earnings have surged. I would love to actually know what part of what part of their operations or what subsidiary in their banking services actually is causing their profits to rise. I don't want to go into details for like I talk like I don't know, but yeah. So I would really love to know, and I'll probably do a deep dive on my own research. But FCMB is quite impressive.
Yeah, and also this FCMB's 87 billion naira pre-tax that just occurred. It was driven by strong revenue growth and about 26.7% increase in gross earnings. That's what contributed to this 87 billion naira pre-tax profit. Also, higher lending income in high interest rate environment and income in a high interest rate environment, wider net interest rate margins, and of course access to low cost retail deposits. So and together these factors helped the bank deliver a profit level that many investors would have normally associated with much larger tier 1 institutions. So I feel like that's a really, really great one there for FCMB.
Okay, so far on the show, I think the research and all the numbers are just forcing me to see that a lot of companies are not backing down. And even despite all of the things that you may think is going the other way in the economy, things are actually there are parts that are that people could watch out for and be hopeful about. Okay, so just like maybe 2 episodes ago we talked about GCB, and their Habari Pay parts. So kudos to fintech may be coming up and new companies and all the likes, but our earlier institutional players are not backing down and they're possibly doing the most that they can to stay afloat. So to watch out for this coming week is definitely going to be the interest rates. Like I already said, that because of the open market operations, wiping out over 3 trillion naira from the economy is definitely going to cause some shakes. So we're definitely going to be looking out for what the rates are going to be, the lending rates, the open buyback rates, and we possibly the CBN's even the CBN's rates most likely would surge from what we have currently at I think 26%. It may surge or not. We're definitely going to be looking out for that. So yeah.
Also, we will also for ourselves and for our neighboring country, the Ghanaian city volatility is another thing to look out for. So let's keep our eyes on the city's reaction to the slight uptick in food inflation. And so if imported food costs rise further, it could stress the local currency's recovery path. So let's watch out for that too.
Okay. So another thing, of course, we have also been on the NGX for quite some time. So definitely we're going to watch out for a wave of institutional volume moving into banking equities as more Q1 results come in. Okay, so investors are definitely going to be picking out what to invest in, which banks have the strongest capacities, and they're definitely going to be buying more equities in some of the banks or some of the institutions as listed on the NGX or based on their performances. So yeah, like what I definitely think you should watch out for that. And if you are an investor yourself, I'm sure we should be looking out for you too, because I mean, what moves are you guys be making, considering that you're seeing money flying, in some really good places. So yeah, I mean, so that's all on the show for today. Thank you so much for joining us on another episode of Across Markets by Business 360. This is, part of our entire ecosystem around business intelligence. So if you are a business owner or an investor and you're looking to gain more insight into what's happening in the economy, markets, and some intelligence that would help you make better decisions in your business, please do check out thisisbusiness360.com for our articles. We have a newsletter. We also have reports that have been filed, like especially the beginning of this year and late last year, that would definitely be of good use for you and your decision making in this coming year. Okay. That said, please don't forget to like, share, and subscribe, and leave a comment on this video if there's anything you would love for us to talk about in any of the coming episodes. And again, I am Joy Abia.
And I'm Vera Ifechuku.
All right. Thank you so much for joining us. And this is bye.
Bye.